On Friday last week, the National Association of Realtors released their December pending home sales data, and the headline was an impressive 8% jump over December of 2022. If you've been following along with the Altos data, you'll know that home sales have been expanding for 2 months now. They obviously picked up in December when mortgage rates did a recent dip. And we shared that sales growth data back in December as it was happening. The question is, will this continue for the year? Based on the data we can see now, it seems likely. However, December's momentum slowed very quickly in January as mortgage rates jumped back up and as a deep freeze gripped the country. So this growth is fragile. Meanwhile, home price growth is pretty solid for the year too. So that's all the data we'll explore today. And that's why at Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos. And let's take a look at the details of the U.S. real estate market at the end of January 2024. There are more homes in contract now than last year at this time. And while I think the trend is durable, it is definitely not guaranteed. In fact, the new pendings, the new sales, they actually came in fewer this week than last year at this time. So a few weeks ago, I confidently proclaimed that home sales would be up 15% in 2024. And since that time, the growth pace has actually fallen each week, 4 weeks in a row now. In this chart today, I'm plotting the growth rate of home sales versus the same week a year prior. We track all the homes that go into contract around the country every week. And so this week, there were 56,000 new contracts started for single-family home purchases. And what we're showing here in this chart is the annual change each week. So there's a dotted line across the middle. That's 0%. When the data is below that line, home sales are shrinking compared to last year. When the data is above that line, the housing market is growing. Starting at the left end of the chart, the December of 2022, there were 40% fewer sales happening than December of 2021. 40% fewer. As the year progressed, most of 2023 saw 20 or 30% fewer home sales than the year prior. And everyone knows that. Home sales were very slow last year. Starting in November, though, the trend finally turned positive, finally back to growth. So just a few weeks ago, we printed 20% more home sales in a week than the year prior. And these are, when I say sales, these are the new pendings started each week. They're not actually sold yet. This week, though, there was 0.8% fewer sales than a year. So it was a down week. And as I said, in general, the sales growth seems durable, but is not guaranteed. And we can see that because, with mortgage rates jump back up and we see a slowdown very quickly. If mortgage rates are in the 7s this year, this growth will not hold. There are now 276,000 single-family homes in contract. And as I mentioned, that's 5% more than last year at this time. So we already know that home sales in the first quarter have grown by 5% over last year. That's already in the bag. Despite this week's little dip in new contracts, I do expect the trend to continue, assuming mortgage rates stay in the 6s. In this chart, each bar is a week with the total count of home sales contracts pending. The taller the bar, the more sales that are happening. At the far right end of the chart is this last week. The light portion of the bar are the new contracts I mentioned. And I've drawn the dotted line so you can see how sales compare. Two things that it illustrates. First, we obviously have very few sales, but sales are finally building just a little more than a year prior. There are 276,000 single-family homes in contract right now versus 264,000 last year at this time. So make no mistake, 276,000 is still almost 30% fewer than were in process in January of 22, right at the end of the cheap money frenzy. One reason that the housing market can grow this year is because we're coming off such a low base. Very few home sales in 23, so 24 is on track to grow. The other reason that home sales volume is increasing in 24 this year is because of less volatility in mortgage rates. If mortgage rates stay in the sixes this year, sales are poised to grow. If they climb back into the mid-sevens, that growth will stall. We watched that happen last fall. That stall happened last September and October. We can see even just a little bit in the last few weeks as mortgage rates climbed from the mid-sixes to 6.9%. Any projection I make about the growth in home sales this year is predicated on mortgage rates not jumping into the sevens or eights again. The projection, however, does not require mortgage rates to fall either. So we can see home buyer demand when rates are stable in the sixes. I do not forecast mortgage rates, and while I'm not convinced anyone can, many of those who attempt to do so are projecting rates in the fives by the end of the year. And I suspect if that happens, we will see more demand with a strong pickup in sales volume coupled with falling inventory levels and a return to strong rising home prices. And when I say inventory would fall with falling mortgage rates, this is what I mean. There are currently 503,000 single-family homes unsold on the market. That's the active inventory across the country. Inventory fell by 0.6% last week. That's actually very normal for the last week of January. Most years, inventory levels bounce around the year's low in the winter months before starting to climb with fresh sellers in February, end of February and into March. In the last couple of years, demand has stayed stronger in the spring, mostly a function of the randomness of mortgage rate fluctuations, but has stayed stronger in the spring, and so available inventory of unsold homes on the market kept declining well into April each of the last few years. In this chart, you can see a decade of inventory trends. Currently, the number of available homes on the market is 8% more than a year ago. And I've illustrated that with the dotted lines on this chart here. So you might also notice how previous year's inventory, the seasonal change in inventory were much more pronounced than it is now. So it's only been 10 weeks since inventory peaked last fall. I don't have clear visibility on whether this year bottoms in February like it used to, or whether our season is permanently shifted later in the spring with inventory bottoming in April. Either way, 2024 inventory I expect it to keep growing over 2023. Again, assuming rates stay roughly stable in the sixes. Let's switch to home prices. If you've been paying attention to any of the home price measures in the headlines lately, you know that home prices are up over last year. And based on all the leading indicators in the Altos data, the home price appreciation trend will continue this year. The median price of single-family homes in the U.S. is now $424,000. That's up 1% over last week and continues to be a few percentage points higher than last year. We use the Altos active market pricing data as a leading indicator of where home sales prices will complete in a few months. House is on the market now, gets an offer in February, it closes in March or April, and you start hearing about that in the traditional headlines in like May. But we can see right now where those prices are, and those prices are up. So here's what's wild. When we look at the price of the homes in contract, which is a very close proxy to the sales that will close next month, the median price of the homes in contract is just under $385,000, and that is 6.8% higher than last year at this time. So as mortgage rates jumped dramatically in 22, purchase demand slowed. 2 years ago, sold way down, and that's when home prices peaked in the second quarter of 22. And as a result, by that same period a year later, April, May, June 23, home prices showed year-over-year declines. And so in this chart, what we're looking at is all the homes with sales contracts pending. Each line is a year here. And we've highlighted this stretch in Q2 last year when home prices didn't reach past the all-time high of the year prior. That's the gray section here. And but as mortgage rates came down in Q1 last year, then buyers came back into the market and home prices recovered so that by the end of 23, home prices were climbing again, just a little, and finished 23 right at the right end of the chart with price appreciation over 22. So now we're back on the left side of the chart, at the start of the 2024 price line. And you can see the median price of single family homes is already 6.8% higher than last year at this time. So it's funny because it's like really scary to sit here and think about the affordability challenges and the multi-decade highs in mortgage rates and project 7% home price increases for the year. But like that's where the data is right now. Buyers are buying at these rates and these prices. And so can you imagine what might happen if mortgage rates fall into the fives like some people project? Like, could we see home prices have a 10% gain in 2024? It seems crazy, but it's not impossible. I frankly think that this will moderate a little bit later in the year. We'll come in at about 5% home price gains for the year. But right now we're sitting at 6.8% year over year home price changes. It can be hard to communicate this with buyers and sellers. Heck, it's scary for me to talk about here. There are folks on the sidelines waiting for rates to drop so they can swoop in for sudden bargains. But they may not realize how much competition is waiting right alongside with them. And if you need to help buyers and sellers communicate, understand about the market, and you need to share the actual data with them, and you should join us at Altos. People need help understanding the fast-changing market. They need to hear it from you. So go to altosresearch.com, book a free consult with our team. We'll help you talk about the market with your clients and your prospects today. There's a link in the description below to join us. Click that and let's get started.